I'm delighted to be joined by people who talk and think about debt on a daily basis. Marcelo Estevao, who's our Global Director of Macroeconomics, Trade and Investment, and Avis Rukchai, who's a Senior Economist in our Development Economics Group. Marcelo, let me start with you. We all talk about debt. We're all worried and scared about debt. Is debt just a bad thing?
No, not really. I mean, debt can be quite good depending on how you use it. Think about when you buy a house, for instance. You don't have all that cash in your account. So in general, you need to borrow to be able to buy the house on the spot, and then you have, 30 years to pay it back. So that's an example of a good debt. If the terms of the debt are good, if they are consistent, these terms to your, income in the future. So that's good debt. The same thing for countries. So if you are borrowing because whatever you get in terms of tax revenues is not enough for you to invest in schools and roads, and these are things that actually are going to make the country grow faster in the future. So if you're doing that, and again, the terms of the debt are reasonable, then it's very good debt. The problem in general happens when this is not the case, when you overborrow, when you overestimate your ability to repay. Same thing, what happened in the world 10 years ago with the debt crisis that was basically caused by over-indebtedness for households. That's when the problem starts. And for a country, the worst thing that you can have, one of the worst things that you can have, is to have a debt crisis, because then you have economic activity stalling, unemployment goes up. In general, the poor are the ones that suffer most. So being careful when you borrow is crucial.
And how do we know what a country's debt is? A lot of us don't even necessarily know our own debt. How does a country think about its debt? How do we know about it? Is there such a thing as debt transparency?
Yeah, this is a term that people use a lot. And think of transparency. Transparency is really what you see in the dictionary. It's the ability to see through something. Why is this good? Because if you have a very transparent account, so everybody knows how much you owe, the terms, first, the risk for a lender to lend to you goes down, because the lender knows, I know about everything about this country. Same thing for a person. You tend to get better terms if you are pretty open about your income, and the bank can really target the loan for whatever risk you have in your life. It's the same thing for countries. So the most transparent a country is, better terms probably you get. Of course, if you are in trouble, you may not be able to get financing, but that's another issue. That's why we at the World Bank work with countries to first make sure that, or at least help the countries to have the fiscal accounts in good shape, and also to be quite transparent on the terms. There are rule books on what you should do, so that everybody knows what's your degree of indebtedness.
Avis, let me turn to you. What's the bank role? Marcelo is talking about how we play a role with governments, helping them with their debt transparency, as well as, of course, with managing their debt. How do we gather data about debt?
Right. So this goes back since 1951, when the bank started to lend to the countries for reconstruction and building their economy. And based on a mandate, operational policy 1410 of the bank, those countries had to report every detail of their debt obligation to the bank. And since then, bank compiles, collects, disseminates those data, and those data are being used for many reasons. The rationale for compiling those data in this format is twofold. Is operational, because the banks need to assure itself on the debt service capacity of the countries, as well as analytical. The bank usually uses those data to make better policies for those countries, to help them, assist them not to go and fall into debt crisis. This data has been, the outset of this data has been integrated as an integrated part on creditworthiness of those countries, macroeconomic analysis, their sustainability analysis, the policies such as non-concessional borrowing policies for the bank, as well as numerous country-specific research, analysis, cross-country, income groups. So those data have been because of the richness that they have been one of the foundation of many policies that the bank provides for those countries and the
And is it
economies.
public data? If I wanted to look up where my country is in terms of debt, can I look it up?
Yes, the bank has also have an annual publication as a public good. So this data, because of the way the profile the data is, the way of the uniqueness those data have been meeting a lot of demand internally, but as well as externally for the users. We have, through this public good publication, with a lot of analysis about the key development of those countries regarding to debt obligations, how those trends and developments have been increasing throughout the years, what are the factors behind it. We do the connection between the economic analysis, policies of those countries and the governments, how they affected this increase on debt and indebtedness, and as well as we initiate a conversation with the users and the public to focus on what we see better and to use the data at its best to a bigger picture. So the creditors, the lenders, the investors can see this data in a way that they can help countries to prosper and improve.
So Marcelo, you see this data, you work with this data every day. How are we doing? Where is the world? Is there a debt crisis coming? Sometimes I worry, I read the newspaper and there's worries about a new financial crisis, a new debt crisis. Is there one? When you look at the data, what do you see?
Well, debt has reached a peak, a recent peak in 2017. That is last year that we have debt data for the whole world. And that's worrisome, no question. But debt crises are very hard to predict. And I wouldn't say that there is a debt crisis around the corner. I mean, many factors would have to come into place for that to happen. But we can't be complacent either. So it is true that some countries are in, and that goes for developed economies, developing countries, emerging markets. You see an increase in indebtedness in all these groupings. So some countries are in a delicate debt situation. So what we do with our main client countries, again, is basically working with them to work through the problem. The first issue is to make sure, like you joked, like I don't know how much debt I have. I mean, so to make sure that they know the extent of the problem. And we have missions to many countries that the World Bank economists work side by side with the authorities to build that database and have all the parameters just so. Then we work with countries to improve debt management. Because if you have very high debt, maybe there are things you can do that helps at least at the margin, but sometimes it's a real help to bring that debt down. Then we also work with fiscal institutions to make sure that they are doing economic planning in a way that's consistent with the true debt reality. So I would say that right now we are working case by case. We participate in all the major gatherings of international institutions, in the G20, G7. So we make sure that the voice of all our client countries are heard and the needs are, and also to basically advocate for better fiscal planning.
Marcelo, we've got people obviously watching this from all around the world. Should any of them worry that if one of our client countries is having some trouble with debt, they're not in a good debt situation, that we're going to go in and say, you need to stop spending, you need to stop investing in education or healthcare? Should anybody worry that the bank is going to go in and start making things worse for the poor? You mentioned earlier that it's often the poor who suffer most when debt isn't managed well. Or do we still go in and make sure countries are investing where they need to build human capital and create opportunities for people to get into the middle class?
Yeah, in our engagement with the countries, we really make sure that the least protected people in the country get some level of protection. That is a priority. Development is about people at the end of the day. It's about jobs, it's about reducing unemployment. Development is not an abstract thing. It's not having a nice bridge. It is really make sure that people are living better. So that's a priority for the World Bank, and we focus on that. In the process of doing a fiscal adjustment, we help countries protect those type of spending and focus on things that they can really, even if it's quite important, but they can live without for a while. That's a very hard balance, but that's a commitment that the World Bank has.
So Evis, you have a very good sense of the historical data. You've been looking at this, not you yourself since 1951, because you're certainly not that old, but the bank has that data since then. What have you seen in the trends? What's the trend data telling us overall?
So anytime there is a financial crisis, post that, there is a lot of activity in borrowing and lending. And since last financial crisis, 2008-9, there has been a lot of increase in debt. So the high-income economies, because of some favorable factors, low interest rate, quantitative easing, consumption of the prices, goods prices, as well as more of the money going through the international market, has been lending to the low income, middle income countries a lot. But on the other side, parallel to that, the public borrowing portfolio has been changing quite a lot. The governments have more access to the international market to issue bonds, to refinance their debt, and those bonds are with not so beneficial advantages on interest rate and maturity and so on and so forth. But in the same time, the borrowing has been shifting from traditional multilateral, bilateral source of financing to non-traditional bilateral source of financing. And that is quite evident and growing persistently last 5 years. So there is always, those debt burdens and vulnerabilities have been raising the concerns of the international community. And this is how we see that, this debt has been expanding quite a lot recently, especially on the market.
And what about, Marcelo, the difference between domestic debt and foreign debt? Does that make a difference to a country, or is debt debt no matter where it comes from?
It makes some difference, because if you owe a particular amount to some other person, but you don't have that type of currency, then you have to go one extra hoop to actually pay that debt. So it does make some difference, because these external transactions are done in general, say, in US dollars or in euros or in what we call convertible currencies. And in that case, this extra hoop sometimes is an issue if the country doesn't have enough foreign currency to pay its debt. And again, can be an important hoop to jump, but that is that at the end of the day. It's an obligation that you have to pay back something that you owe. Sometimes actually domestic debt can be actually more complicated, because say the major banks in an economy are the ones that are holding that debt. And if you don't pay back, you can create a banking crisis. And maybe if you don't pay this foreign agent, it's something that happens outside. So what I'm saying is that both have their difficulties, and countries have to manage both. And we help them manage both. Like she said before, what is peculiar about this time around is that the environment has changed. It's not anymore the case that, say, least developed countries are borrowing just, say, from the World Bank.
Right.
No, they have access to market, interest rates are low, so the set of creditors that can sit around the table are big. We need a bigger table. So another role that the World Bank has is to coordinate somehow this negotiation. Sometimes happens because countries need help dealing with different sets of creditors.
So is the world very different today than when we had the discussions about debt relief for the HIPC countries, the heavily indebted poor countries, many, many years ago? There's a lot of talk of debt relief. A lot of debt relief happened. Everybody talks about the Paris Club when it comes to debt. Is that world different now with the entrance of so much cheaper money on the markets and so many countries now being creditworthy and able to access that money? Or is it still very much about the Paris Club?
No, the world is quite different. That's exactly what we are talking here. We have other bilateral creditors that are not members of the Paris Club, for instance. Those are other countries that have high savings, and they are rightly investing abroad. And the borrowing countries are rightly taking those savings and applying to improve the infrastructure or their domestic situation. And that's quite different from say 10 or 15 years ago. And on top of it, we have, again, private banks. They have lent to these countries. We have export credit agencies who have insured lending from private banks to, say, a company to build a dam in a particular country. So the environment is more complicated, which makes more fun for me. It's a more fun job, but it's more work.
And in terms of changes, Evis, have you seen any changes in how we now gather the debt data or how we publish it? Or again, is it the same world? Are we doing the same thing that we did in 1951 today in 2019?
So there is always crisis happening. And after the crisis, it's always a discussion of there is a gap in the information, there are data not being represented or collected correctly. So there is a lot of criticism onto the data that international community has, users have, policymakers have. And for example, in post-crisis, Asian crisis in early 90s, late 90s, we had quite a lot of criticism on frequency of those external debt data by more detailed information on what are the instruments of those debt, what is the maturity, what is the hot capital flows versus the long-term one. So the bank has been very responsive towards those demands and from the users and decision makers. So in 2004, the bank jointly with IMF established a unified centralized database on quarterly external debt data. And that was quite a big revelation because these data are quarterly. They are more detailed on what is the sector that is actually borrowing, what is the debtor, rather than just the total of public and public guaranteed debt. And more debt instruments, what is the maturity, what is the short term, how much the government can afford to pay the short term, and so on and so forth. And that has been for all countries, all level of income, high income, low, middle income. And as of today, we have more than 140 countries reporting to this unified database.
And what's the frequency? I think, and Marcelo, forgive me if I misheard you, but I think you said the last year we have good data from, or full data from, is 2015. So if 2017. Yep. So even if it's just 2017, it's 2 years ago, and given that things can change quickly, is that enough frequency? Can we help governments make decisions if we're basing that decision-making and our advice on data that's 2 years old?
So the quarterly data that we have so far is end 2018. The annual data is up to 17.
Okay.
So there are different type of databases that the bank has been working on in order to fill these gaps of the data so we can have faster decision making and faster policies to be implemented. So that was one of the post-financial crisis in Asia at the time. Similarly, in 2008-9, post-financial and global economic crisis, the bank again responded jointly with IMF to the demand for filling the data gaps based on the G20 initiatives and the G20 recommendations. So the bank led this recommendation on establishing a public sector debt, expanding not only to the external debt, but also domestic debt, which was another new thing that the bank stepped in and led, and still we are working to increase this reporting from those countries, especially the poor countries, and helping them to have a better capacity on reporting this data. And of course, the IMF and the World Bank together have been always working to set the standards and unify the methodology, definition of domestic debt, because sometimes it gets lost into
I can imagine.
Definition. So, so far we have been working very closely also with the international community, bringing on board OECD, European Bank and Eurostat to get these countries together in this new establishment of the public sector debt.
So Marcelo, I'm going to give you the last word. If there's one thing you're hearing from our clients when they talk to you about debt, what is it? And if there's one piece of advice you would give our clients, what is it?
Borrow wisely. Be careful on the quality of spending. This is really the key thing here. Why are you borrowing? And are you spending on things that after will allow you to pay back this loan? Are you really investing in the future of the country in a sensible way? I think that's really so. Are you building good schools and paying teachers a good wage so that they are going to teach our kids well, and then say 20 years from now they'll be productive members of society? And by the way, that debt that you incur to do that is a 20-year loan, because that's when these people can, raise productivity. Exactly. So I think the key here is have good spending plans and make sure that you are borrowing well. Fiscal institutions are key for that. So having good fiscal rules sometimes help as well.
And that sounds like wonderful advice, not just for our countries, but for all of us.
Yes.
And so friends, don't forget, balance your checkbooks and think about your debt. Borrow for investment, not for consumption. Marcelo and Avis, thank you so very much for joining us this morning. It's a fascinating discussion and something that really resonates with a lot of people, particularly with all the news about debt management in the world. But of course, we're not just here, friends, to hear from our experts and ourselves. We want to hear from you. So here's a quick look at what you're all saying right now.